So, welcome everyone, guys. Welcome in today's session. Actually, as I said, I will host a liquidation session, liquidation webinar about what liquidation is, how can we use the liquidation, etc., etc., etc. But it won't be in this session. It will be in next week's session because I have to be prepared for this session. You know, make some files, make some notes, etc., etc. So yeah, in this session, I have two topics for you, and the first one will be an educational topic. And actually, this educational topic won't be scripted by me, but by you. So technically, it's a not question and answer, but a doubt and answer topic, where you ask your doubts about, for example, an analysis, or you just want a clarification on something, on some entry model, on some liquidity concept, or anything like this. And in the first 20 minutes, I will answer for these questions. And after that, we will do the usual top-down breakdown analysis, where I will start on the 4-hour chart, 15-minute, 5-minute, 1-minute, and I will create a perspective for every single time frame, and I will tell you my expectations on what could happen on charts. I will tell you the possible scenarios for the upcoming week. You know the drill. We do this on every single week. So first of all, as I said, do you want clarification on any kind of concept? Because I just received some DMs. I don't really recall the names, but I just told you guys that ask the questions in this webinar. So we are here. Ask the questions, please. If you got any question about analysis or anything like this, please just ask those questions and I will answer them with an educational topic, for example. Anyone? Any doubt about anything? Or you're all clear?
We are a pretty educated community, you know.
So no one? Okay, let me just ask it here. Do you want me to explain anything for you guys?
Can you do the criteria?
Guys, are you here?
Hello?
Yeah, we can hear you.
Oh, zone refinement. Isaac, what do you mean? Because zone refinement is a pretty huge topic. What do you mean under zone refinement? Okay, guys, I will just create the tab analysis. Okay, here are the questions. For the best entry. But basically, zone refinements are in the PDF. So that can be explained more. Zone refinements are pretty easy. If there's a 15-minute zone, for example, here's this 15-minute zone. I just mark it out, drop down to the 5-minute chart, search the exact same zone, and refine it down on the 5-minute chart for the smaller area. And this is zone refinement. Or for example, here's a 5-minute zone. I just drop down to the 1-minute chart, search where the inefficiency started from. Here's the inefficient area, 1-minute refinement of the 5-minute chart. This is how you can refine a zone. Difference between zone refinement tab and 50% mitigation. So actually, this is a good question. The difference between a zone refinement tab and the 50% mitigation. Technically, so for example, here's the first zone refinement tab, right? Because this zone is inside of the 50-minute zone, for example. So this bigger zone is the 50-minute zone right here. The smaller zone right here is the 5-minute zone. Okay, let's just assume that price is moving in a downtrend, creating series of lower lows, lower highs, right? So this is the downtrend, this is the less recent 50-minute zone. Inside of this 50-minute zone, there's this refinement zone. Okay, so there's a chance that price will come up to the supply zone, for example, with the 1-minute order flow, tap the supply zone, this 50-minute subtrend after the 50-minute mitigation. Price just changes character to the downside, right? This change of character could be a sell trap because it didn't mitigate the 50% or either the zone refinement tab, right? Right. So this could be a sell trap, but it depends on you if you'd like to actually open a position on this supply zone. If you open a position on this supply zone, then you can easily be part of this sell trap. That could happen, but you have to risk this position if you're happy with the trade, for example. But you're just asking about the 50% mitigation versus the zone refinement mitigation. Then when do you expect further zone refinement mitigation after the 50% is being mitigated? So, for example, after price just don't create a sell trap, it just comes up to the 50%, and 50% will be mitigated right here at this zone. So the 50% of the 15-minute zone is being mitigated, but the 5-minute refinement is not being mitigated. Okay, in this scenario, so if this happens and price, for example, reverses on the 50% of this 15-minute zone and creates a sell change of character to the downside on several places, so for example, a strong change of character here, then you can safely open a position on the 50% of this zone. I mean, after a 50% mitigation of this zone, you can enter in a position on this fresh new created zone, because we still have this rule when the 50% zone, I mean, the 50% of the zone is being mitigated, then it counts as a full mitigation. But here's the question. Is there a chance that price will come up to this supply zone to mitigate actually the refinement? Yes, of course, there's a chance. There's a chance, but you can enter in a trade with a much safer condition after the 50% mitigation, even though there's a unmitigated refinement zone above this one. There's a chance that price will, of course, sweep you out from this trade and tap the mitigate, refine zone here. And if this happens, then after a refine zone mitigation, you can expect one more change of character to the downside and re-entry after the refinement mitigation. But there's another scenario when price just simply reverses on this zone, tags you in a trade, and this zone will be left here until price reverses on some sort of demand zone. And then after this, this will be liquidity. So technically, just take a look at this. After a 50% mitigation here, price just changes character to the downside, comes up to the entry point, tags you in the trade, and this right here will be liquidity for the refinement zone, right? So this liquidity is up here for the refined 5-minute zone, and after, for example, some demand mitigation in the short run, price will come up to sweep this liquidity from above this refinement point and tap the refined supply zone and tag you in a trade once again with a short continuation. But moral of the story, if the 50% is being mitigated right here, for example, for a 15-minute zone, a 15% is being mitigated and price changes character to the downside, you can safely enter in a trade because the 50% has been mitigated. Okay. Did this answer your question? Shilling markets? Perfect. Okay, I will just, there are so many questions. Okay, I will just choose randomly some questions because, we got 20 minutes for this question and answer. What do you mean by this is decisional demand/supply? Okay, so what is the decision and what is the extreme? So let's assume we have a bullish order flow coming up, and this bullish order flow taps into a supply zone. So after this bullish order flow, price taps into the supply zone, and this supply mitigation changes character to the downside. So there will be a character changing movement to the downside. Here will be a character changing movement, right? So this character changing movement to the downside will print a supply zone, which will be the extreme of the character changing movement, extreme of the order flow. So this character changing movement here, this character changing supply is the extreme. This is the extreme. After this, price, for example, creates a pullback and can come up to this extreme zone. But after this pullback, price just retraces again to the downside, creates another break of structure here, and for example, a strong change of character here. Then it prints a decisional supply zone, and this will be our decisional supply zone. So the extreme is the one that started the whole order flow. The decisional one or ones are the ones that below the extreme one or above in a bullish trend, of course. So all of these zones, this one and this one, so the middle one and the lower one are decisional zones. This is decisional, this is decisional. This is the extreme which started the order flow to the downside. And of course, there's another question that how can you trade decisional and extreme zones, but this has been already explained. I believe it has been explained in the flip and character changing entry webinar, so please just check that webinar. Another question. Can there be a scenario where decision will be a liquidity? Yes, of course. Yeah, let me just. So if there's no liquidity created for the decisional one, so if there's no liquidity is being printed for this zone. So price, for example, can't create a friendly liquidity or triple taps or double taps, then this decision will be the liquidity for the extreme. So if your zone has no liquidity, then your zone will be the liquidity for the extreme one. But if this zone can create liquidity, so there will be liquidity, for example, triple taps below this one, then, and it creates breakout structure to the downside, then a new decisional supply will be printed here, right? So we will have a new decisional supply here at this region. And if price can't create liquidity for this zone, then this zone will be the liquidity. But if it creates liquidity, then it has a chance that this zone will reverse price. But still, this is part of the liquidity, right? Because here's triple taps. So if this scenario happens, then more likely this zone will be tapped and this zone will be able to reverse price to the downside, and price won't be able to come up to the extreme one because there's liquidity below the decisional one. But if your decisional one do not have any liquidity, then this decisional one will be the liquidity. So this high point will be the liquidity for the extreme one. This is how it works. So if your zone don't have liquidity, then the zone will be the liquidity for the upper area. If your zone has liquidity, then your zone has a really high chance to reverse price. Okay. What is the difference between a higher time frame 50% mitigation tap and a small tap like 0.1% that gives confirmation? Simply, just imagine, just think logically. So for example, here's a zone, right? Inside of this zone, I mean, this zone has been created by a candle. So for example, here will be a candle, and below this candle, here will be a wick, for example. And yeah, this is our supply zone. So price is moving in a downtrend, coming up to this supply after, for example, a retracement here. So this is our new supply zone, coming up to this supply to tag us in the trade. This is the 15-minute supply, right? So just don't forget, this is a 15-minute supply. But price is coming up and tags the really, really small percentage of this candle. After this tag, price just reverses to the downside and actually creates a change of character. But the purpose of this character changing movement is to collect more liquidity, because just think logically, where are the orders resting? Where are the orders inside of this order block? More likely, if price mitigates the 0.1% of this block, then it actually won't collect that much of an orders, and it won't be able to create that much of an impulse movement to the downside. If it mitigates the 50% of this zone, then much more orders are being collected, much more orders are being opened on this block, of course. And after the 50% mitigation, price can actually create the real movement to the downside, which isn't just a fake trap for us, for the early sellers. And yeah, this scenario happens mainly when there's no liquidity sweep into the supply zone. So when there's no liquidity sweep happens into the supply zone, so price just simply comes up to the supply, no liquidity is getting swept into the supply zone, then this sell trap will be liquidity, because our main entry model always contains liquidity sweep. So we always need liquidity sweep for our entries, right? Because we are always entering after others are getting swept out from the market. If others are getting swept out from the market, that means we can place our orders into the market. If old orders are getting swept out, or new orders will be replacing the old orders, right? So we always want liquidity sweep for our entries. And if there's no liquidity sweep into the supply zone, price can't liquidate any triple taps, liquidity trend line, anything into the supply, then this character changing movement to the downside will be the liquidity collection, because early sellers will be opening positions here. If these early sellers are getting swept out, then all of their stop losses will be collected, and all of their stop losses will be converted into new orders in a deeper mitigation on this 50%, 50-minute zone, right? And more like that deeper mitigation will stop at the 50%. This is just a rule. If the early sellers are getting swept out, 50% is being able to hold price, and it will create the real movement to the downside, character changing movement, and you can enter here in the market after the real character changing movement, because our main model to enter in any trade is the liquidity collection. We always need liquidity sweep. We always need liquidation for our entries, because without liquidation, we will be the liquidity. We always want to enter after liquidity is getting swept into our favor. If liquidity is getting swept into our favor, then we can actually safely enter, because there's no more liquidity needed to be swept, because we will be the new orders that are replacing the old swept orders. So yeah, if there's no liquidity is getting swept into the supply zone, then more likely it will be a sell trap right here. And after a sell trap, it will be swept into the 50%, and the real character changing movement will happen. And of course, vice versa for the long scenarios too. That means that always these regional entry supplies must have a liquidity set on order made there. Is there any condition or circumstances for re-entries after we take a break even, like the one you took yesterday after break even? Yeah, let me just switch to the 1 minute chart and show you this live example, because here was my entry. Let me just search for this entry. Here was my entry, right? I entered on this supply zone. So lots of liquidity has been swept into the supply. So liquidation, just imagine all of these sell orders, all of these old sell orders have been reopened on this supply zone, on this order block, because just imagine, here's this trend line liquidity. This stop loss will be somewhere around here. These steps will be here, these steps will be here, these steps will be here, these steps will be here. If all of these orders, all of these old stop losses are getting swept out, these will be reopened on the next recent valuable order block, which will be this one for us. So all of these old orders are being reopened on this block. So I just placed the 50% limit order on the, I just placed the limit order on the 50% of the supply, right? I just get tagged in the trade, and I did set break even after the strong rejection for the second time on this 1 minute demand zone, and after the break of this low point. So I just did set break even. I got swept out in break even, but for a re-entry, I just simply re-entered here because price couldn't break above the last recent high point. For the second time, it couldn't break above the last recent high point. Sorry, it just wicked above several times. It just swept this sell side liquidity from here, from this region, swept all of the early sellers out here. And yeah, it couldn't even close above the last recent high point, couldn't even close above the last recent supply zone. It just rejected strongly inside of this supply. And after this, after the liquidity has been swept right here at this region, the change of character has happened with inefficient movement, and actually liquidity has been printed here. So technically, double liquidation. The reason I entered here after taking a break even, it was double liquidation. As you can see, I'm always playing around liquidity because liquidity is the main key for me. It's the literally strongest key for me, because if liquidity is getting swept, and especially when double liquidity is getting swept into your favor, then that will be a really strong trade, and you can try with a re-entry. Because just imagine, all of these sell orders that has been opened here, swept out with this movement. So all of these orders have been reopened here, because here's the footprint. These orders have been reopened here at this candle. Here's the footprint of price. After this price change character here to the downside, didn't mitigate any demand zone, but created liquidity once again. So sellers entered here in the market because here was this flip zone. This was a flip zone. Actually, as you can see, it reacted on this last recent demand zone. This candle reacted on that last recent demand zone and flipped this demand zone with an inversion movement, as you can see. And just imagine how many sellers opened positions here. That's why it created a double tap. So here was the flipping zone. Here was the actual footprint of price when sellers opened positions here. They were the early sellers. They have been swept out into the real character changing inefficient area. And that's why I opened the position here, because these sell orders, these sell stop losses have been swept out into my area. And after these sell stops are getting swept into my area, then I can open a position, because double liquidity collection happened here and here. So more likely my order right here won't be liquidity, because before and after my order, liquidity has been collected. So before my order block has been created, liquidity has been collected. After my order block has been created, liquidity has been created and collected. So more likely my order block won't be liquidity, because it swept and collected liquidity. So yeah, that's the reason I opened the position here. I just like these signs. It didn't break above the high point, didn't break above the supply zone of swept double-sided liquidity here and here. So yeah, that was the reason. Okay, let me just read one more question, then I will start the top-down analysis. Where was I? Okay, one more question. If we are bullish in the daily and 4 hour, but bearish on the 50-minute and 5-minute, what is the pro trend side? Just read the webinar PDF, Milfi. Literally, this scenario is being written down in the PDF, the plan PDF. If you are bullish on the 4 hour, we consider the 4 hours trend, bullish on the 4 hour. So this is the 4 hour trend, but bearish on the 15-minute and the 5-minute. What is the pro trend? This scenario is literally being explained in the PDF webinar. The PDF plan. So this is the 4 hour. then price will, this is the 4-hour leg, then I will just draw the 15-minute leg. So price just creates the less recent, or you just said, okay, bullish. So price has just created the less recent breakout structure. So this is the 15-minute structure, but price changes character here to the downside, and it changes character on the 15-minute chart, right? So 15-minute will be bearish. 15-minute is bearish, and we consider this as the pro trend. This is our pro trend, and we can target this less recent 4-hour demand zone. And so swing TP, and more likely the fractal confirmations will happen here on the 15-minute chart and the 1-minute chart. And after that, all of the time frames will be fractally confirmed that is bullish. But in this region, when 4-hour is bullish, daily is bullish, but 15-minute and 5-minute is bearish, then this 15-minute structure will be pro trend for us. This is the pro trend we are trading because it's leading down to a valuable 4-hour demand zone. And after the valuable 4-hour demand zone is getting tapped, all of the time frames will align together. And yeah, fractal confirmations will happen. But this has been explained and written down in the webinar. All right, one more question. Can fit in our time. Please show us how to use the new criteria tracker. I mean, it's not a rocket science, but I will show it. Okay, where is it? It's literally so easy that here's this. Okay, you can see my Excel, right? Can you see my Excel file? No, you can't. Wait a minute, guys. New share. New share. Yeah, screen 1. Okay, now you can see my whole screen, right? With the, you can see the Excel file, right? Please, guys, can you see it?
Yes, sir.
Okay, thank you. Finally, what it means by fractal change, Lucas. We have a dedicated webinar for this. I believe it has been hosted in February. Just check the Telegram channel and you will see. The name is literally Fractal Confirmations. So please just check the webinar. So here's the criteria tracker. Let's just track the criteria. How can you use this criteria tracker and what the hell am I doing here? Where the fuck was I? Okay. Here. So for example, track the criteria for this trade. It's a pro trend plan, right? So higher time frame mitigation. This was the higher time frame zone. You place an X in the box. One criteria. Liquidity to take. Liquidity has been swept because I won't explain it again. I explained in the recap video. Liquidity to take. Liquidity has been swept into the higher time frame zone. Okay. Inefficiency. There was inefficiency here. Of course, here was inefficiency and here was the inefficiency too. Starting from this zone and starting from after the zone mitigation. So double inefficiency. Pro trend, yeah. After these 4 criteria are fit, you can search for variable criteria. As you can see, place an X in the box if the criteria fits. All the base criteria must meet before you execute a trade. Add your variable criteria after all base criteria are completed. It is being explained literally in this file that how can you use this. Change of character, yeah. Here was a character changing entry, right? Change of character, V-shape, coming up, coming down, V-shape strongly. Liquidity target, there was huge liquidity target right here and on the higher time frame too. Here, of course, there's a liquidity target. 50% mitigation also happened, right? 50% has been mitigated, perfect. Not coming from unmitigated zone. This zone, I mean, this entry wasn't coming from unmitigated zone. X. Corrective pullback, strong through. This isn't true because actually bull movements were actually stronger at this region. So this isn't the criteria for us. And combined liquidation, that was combined liquidation, right? Because here was the sweep into the higher time frame, and here was the liquidity for the entry opportunity too, and here was the sell side liquidity sweep too. So this is how you can use the criteria tracker trading plan planner, and it will count the criteria for you that this trade has 10 criteria. That's it. That's it. All right. Abdul, have you seen the webinar actually? Or anyone who's asking about the criteria tracker or the trading plan webinar, have you seen the webinar? Because everything is being explained, even every single question that has been asked here have been explained in the webinar. Every single question. I mean, I'm just referring to the actual criteria tracking and trading plan questions, not all of the questions, but every single question that you just ask here have been explained in the trading plan webinar and the trading plan PDF. So please just watch it carefully. All right. So we just have to start the analyzing session. And we will create the tab down breakdown. Let me just remove all of this mess from here at this region. All right. Start with the clean charts, fresh clean charts. Okay, let's start the top down breakdown, starting from the 4-hour chart. But you know, on the 4-hour chart, we won't be able to recognize anything because you already know that it's actually just a range. I explained this in the Sunday forecast webinar. So please, if you haven't seen the Sunday's forecast webinar, please just video, just watch that video also. But here's this region on the 4-hour chart, right? So I've explained this several times in the markups and everywhere that price will just swap the 1.000 psychological level into the demand zone and start to the bullish order flow after this sweeping region into this demand zone. Okay, what has happened after this? Price is just rejecting on the supply zone up here. This was the last recent 4-hour and daily demand zone, supply zone aligned together. Price is rejected strongly on inside of the supply, created a upside liquidity, as you can see, first tap, second, third, fourth, 5 equal taps right here, and this liquidity has been swept with this movement, and after a sweep of the liquidity, price will just reverse strongly to the downside, right? That's what we can see. Okay, but also we can see that price just created a whole range on the 4-hour chart. Here was the upside range and here was the downside range. So this is just a whole range, equal tops, equal bottoms. The equal tops have been swept with this movement, as I explained. So the downside range is still there, waiting for us to be swept. And here's a perfect perspective for the 4-hour chart. That is actually really, really high possibility. Okay, I just want someone to no, this is hard. This is hard. So I will just analyze the chart. Okay, so here was a liquidity sweep. I just mark it. Here was the sweep of the liquidity, right? This movement swept all of the liquidity, and after the sweeping movement, price has just strongly reversed to the downside, with creating change of character on the 4-hour chart on several places, even here. So here was a change of character, and here was a strong change of character even, and this strong change of character movement created liquidity on the downside. So here's liquidity, and here's liquidity too, right? So here's liquidity too. So this is just a whole liquidity range and a mess, waiting for price to be swept, because the upside range has been swept already. This upside range has been swept. This downside range is waiting. This downside range, sorry, is waiting to be swept. Okay, but here comes a perfect scenario that could happen actually on the upcoming days and even on this week. So here's this supply zone, this 4-hour supply zone that is still remains unmitigated and still inefficiency can be found there. This supply zone was caused the character changing movement on several places after the sweep of the liquidity to the upside, right? With a huge inefficient movement to the downside. Yeah, and here can be found inefficiency between this low point of the candle and between here. Here's still inefficiency needed to be filled up. Okay, one more criteria for the strongness of this supply zone is that here's liquidity, or even this liquidity is right here. But I will just mark this. Here's liquidity. Price just built up perfect double tops, or not perfect double tops, but technically this is liquidity built up for this supply zone. So what can we expect on the 4-hour chart? Actually, this is lining up perfectly. This is lining up perfectly with this downside liquidity. So the first scenario that could happen on the 4-hour chart is if price comes up to sweep this liquidity, taps this 4-hour zone, creates a 15-minute change of character, and after a 15-minute change of character, of course, it will go down to the downside range. And this could be your final target point right here. This is the lowest point of the liquidity, right? So this is a weak low point actually. And yeah, why is it a weak low? Because it's rejected on the supply zone. So this will be the last point of the liquidity. This will be your target point if this scenario happens. And actually, this scenario has a really high possibility and chance to happen. Simply because looking at the time frame, looking at the trend, looking at the liquidity, and this is what the signs are telling us. So liquidity has been swept on the upside. After this liquidity sweep on the upside, price created a huge character changing movement with inefficiency to the downside and built up downside range. What do we know about ranges? And of course, here was the downside range too. What do we know about ranges? If the upside is getting swept, the downside will be swept sooner or later. If the downside is getting swept, then the upside will be swept sooner or later. So the upside has been swept and huge inefficient movement started to the downside. So this liquidity and this supply zone is lining up in our favor, that this will be swept, this zone will be tapped, character changing movement will happen on the 15-minute chart. And if the character changing movement happens on the 15-minute chart, we'll be able to confirm it on the 1-minute chart, and we'll be able to target this liquidity line with shorts. This is our major plan for the higher time frame currently, and this looks really, really promising. Okay, let me just remove this from here and this one too, because it's annoys me. All right, so technically that's all about the 4-hour chart. Nothing much to explain because still this is just a range. Still this is just a match. It's ranging. It's just ranging. Can't create any impact movements. Just take a look at this price action region when price is moving like this, and take a look at this. It's just a mess. It's just a whole mess. But we can still trade inside of this range on the 15-minute chart, of course. So let me just switch to the 15-minute chart. Sorry, switch back to the 4-hour chart because I forgot to mark zones. I will just mark this demand zone and switch back to the 15-minute chart. Sorry, I meant to mark this 15-minute demand, not the 4-hour one. All right. Okay, so we already know what has happened yesterday. I mean, since yesterday, because, you know, I just created a little recap video and there was markups. So you know that price will just swap liquidity, this liquidity into this 15-minute supply zone. After this liquidity sweep into this supply zone, price reacted on this supply, created a change of character and created a bearish order flow, leading them to this 15-minute demand, which has been tapped perfectly here, as you can see. So this demand zone has been tapped. Okay. This liquidity line is still here. This is still the liquidity target. Of course, this will be the lower time frame liquidity target. And this is the higher time frame liquidity target, right? This is the 4-hour liquidity line, and this is the 15-minute liquidity line. Both of the liquidity lines are getting built up for the supply tap, and after a supply tap, this liquidity can be swept finally. So let's just make the scenarios. Let's just make the narrative for this session on the 15-minute chart. Because we know what happened here. Price changed character and started a bearish order flow. As I said in yesterday's session, and I believe recap video, that there's a chance that price will react on this demand zone. And there's a chance that price will break this demand zone. Okay, the first scenario happened when price reacted on this demand zone and changed character to the upside, leading to a bullish order flow, right? But there was just a small percentage mitigation. But here's the small percentage when actually this works. In small percentage of the time, this will work. So price doesn't have to necessarily sweep the, tag the 50%. But here comes the rule once again that I just explained at the beginning of the session. Why was it enough? Why was it enough to actually reverse on the top of the zone, and why wasn't it required to sweep the 50%? Simply because there was liquidity. There was liquidity built up for this zone. And as I explained the exact same scenario at the beginning of this session. Here was this liquidity, and that just because this liquidity has been swept into this demand zone, it was strong enough to reverse price to the upside, and it wasn't actually required to sweep the 50%, and it wasn't required to tap the 50% because this liquidity was strong enough to reverse price to the upside after the first region tap right here. If this liquidity would not have been here, then more likely, if this would have been just a single bottom, not double bottoms, then more likely price have just simply came down into the 50% of this zone and reversed after the 50% mitigation. But since there was liquidity, this was enough for price to reverse the upside. Okay, so what else is happening? Price is building up liquidity for this supply tap. Okay, what else can we see? We can see that price has broke above this liquidity line right here, right? So swap this liquidity, and after it created a change of character to the downside and started this bearish order flow. This bearish order flow wasn't strong enough to break below the last recent 15-minute demand zone. So it just reacted on the last recent 15-minute demand zone, meaning this high is weak and this high is weak. This is liquidity, right? All of these highs were weak. Why? Simply because this couldn't break above the last recent demand zone. Okay, price has just created a swing breaker structure to the upside recently, and the swing breaker structure has happened here, right? This was the last recent swing high point, which has been broken with body closure to the upside here. Okay, but as you remember, sorry guys, Let me just check something. Okay. Okay, never mind. So price just created a breakout structure to the upside with body closure. I want you to mark someone who raises their hand. If you raise your hand, you can answer this question. I want you to mark the last recent demand zone that has caused the breakout structure to the upside. Who was the first? Well, please. Exactly. This was the last recent, oh my God, sorry. This was the last recent demand zone that has caused the breakout structure, swing breakout structure to the upside. But we have another demand zone down here, which has caused another inefficient movement to the upside. And I won't use just the wick here because the wick zone in this case is really, really small to be considered as a single demand zone. So I will just use the combine the candle with the wick. So this will be the whole demand zone for us in this case. And we have this demand zone also, which actually broke about this supply zone here. And this was actually a flip zone of this supply zone here. So as you can see, this demand zone was reacting on this supply region here. There was a rejection point coming up, coming down, flipping the supply. So we have another flip zone. And why is it so powerful? Why is this supply zone so powerful? Because price just simply created liquidity for this zone. First, second, third, fourth, 4 equal taps right here, as you can see. So this was the liquidity line built up for the supply, which had inefficiency, which broke over the last recent demand zone here. For the clarity, I will just mark out for you. So here was this demand zone. Here was this demand zone, which printed a reaction on, I mean, this movement printed a reaction on this demand zone. And from this, please mute your microphone. I don't know who's talking, but mute your microphone. Okay, so here was a reaction on this demand zone printed here, retracement, and from the supply price, it just flipped this demand zone to the downside, as you can see, and created liquidity below the supply zone. So a continuation could have happened from the supply zone easily. If price would have reacted on the supply and created a change of character and to the downside, a continuation would have happened easily, but price just flipped this supply zone, and that's why this demand zone is valuable, because this demand zone could flip this really, really, really valuable supply zone. And that's why we mark this demand out here, because it just flipped this valuable supply zone. Okay, so we have two potential zones for the upcoming longs. Because yeah, right now we are looking for longs. Our main trend changed to bullish. It's heavily bullish right now because price just simply broke over the swing high point. So we are looking for long opportunities after this supply. And this liquidity is leading up to the supply also. So more likely the supply will be tapped. Okay, so let's just check the possibilities. First possibility in the 15-minute chart, if price reverses here, of course, there was a body closure to the upside, so this can be considered as a real breakout structure to the upside. If price reverses here, taps this demand zone, prints a change of character, then we'll be able to target this supply zone. Simplest plan ever. Simplest plan ever. If price comes down to this demand zone, can't create a change of character entry, but it flips this demand, then I wouldn't really recommend to take shorts down to this demand zone. But if you have balls, if you have huge balls, then you can actually take shorts down to this demand, because the change of character will happen to the downside. And technically the main trend will be bearish, but this still can be just a simple liquidity sweep for this zone. Okay, so second scenario, if price comes down to this demand, flips this demand, and if you have huge balls, then you'll be able to take shorts down to this second demand area, which is more valuable than this one. So this demand is more valuable than this one because it could flip a really, really, really valuable supply zone. Okay, so this is the second scenario. Third scenario, you just simply skip the shorts down to the second demand zone and just simply wait for the mitigation of this demand and wait for a confirmation inside of this demand. And if the confirmation happens, you'll be able to target this supply with swing TP or this high point with your original TP, because this will be a weak high, and we are targeting weak highs because those are liquidity more likely between this low point and between this high point. Let me just calculate. It will be around 15-20 restore ratio. No, just 11, just 11 restore ratio between this high point and this breakout structure point. So yeah, this is the third scenario. Fourth scenario, of course, if price breaks below both of these zones, so this one and this one, if the flip of this zone happens, we'll be able to take safe shorts down to this less recent demand zone here, to this demand zone, to the 50% more likely. So these are the scenarios lining up for us on the 15-minute chart. Easy, simple scenarios. Easy, simple zone taps, easy, simple reactions. Huge balls, it's my second name. Lunchtime to the upper demand. Yeah, this has been actually formally lunchtime and this hasn't. Yeah, so this more likely will be broken. I believe this demand zone will be tapped. So more likely the second plan will be the strongest when price comes down to this demand zone, creates a flip zone, short possibilities down to this demand zone. Change of character entry model, targeting this high point or targeting the liquidity line, highest point of the liquidity or targeting the supply. So more likely this has the highest probability to happen. And before I continue with the 5-minute chart, let me just grab a cup of water because I'm actually thirsty as fuck. Okay, here I am. Both demand zones are coming from lunchtime candles. No, just the upper one. This is lunchtime. This isn't lunchtime. Lunchtime opens at here 1 p.m. unless until 2 p.m. Everything that happens between these time period will be lunchtime. This isn't lunchtime. So let me just continue with the 5-minute perspective. This is the 50-minute plan. Just mark it. Actually, let me just mark it myself and I will send a picture for you so you will know the scenarios. First. Second. Third. So these are the scenarios. Okay, copy link. Sorry, guys. I just want to send these for you. So you will have these pictures. Bear with me. All right. So continuing with the 5-minute perspective. Okay, what can we see on the 5-minute chart? On the 5-minute, we can actually refine this zone, but it won't be a refinement, it will be a buffer. So this zone on the 5-minute is much, much bigger. But if you take a look, sorry, this is the 50-minute zone, but the 50-minute actually lines up with the 50% of the 5-minute. So if the 50% of the 5-minute is getting tapped, then the 50-minute will be tapped. So I'm just keeping this zone the way it is. And I can refine this zone for this region. So these will be the refinements for the 5-minute chart. I will just delete this zone from here because it annoys me. And let's just see if we get any zone here. No. Let me just place a marker here. So technically price isn't coming from a supply zone currently. Price isn't coming from a supply zone at this region. So the pullback is coming from not a supply region. There is a 5-minute supply below the 4-hour. Okay, let me just see. You mean this one? Or this one? Let me just see. Yeah, there's a possibility that this supply zone will be able to hold the sweep and reverse price to the downside. But I believe the higher time frame 4-hour supply will be tapped. But I'm just keeping this on the chart, so we'll be able to know which will be the stronger. But yeah, thanks for pointing it out. But in my opinion, the 4-hour has to be tapped in order to actually continue the order flow to the downside. And more likely this 5-minute won't be strong enough to reverse price to the downside, but we will see. We will see. Thanks for pointing it out. Okay, so 5-minute perspective. I just see. Zoom in. Same thing we can see on the 5-minute chart, right? So nothing has changed. The same scenario is going on for the 5-minute chart technically. If price comes down to this demand zone, blah, 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 same scenarios targeting this supply zone. This could be our new target point. So yeah, this 5-minute supply could be our new target point. Second scenario of price breaks below this demand zone, shorts down to this second demand zone, change of character entry targeting the high point right here. These are the 3 scenarios that are lining up for us. And basically it's the same as the 15-minute chart. So it's pointless to analyze more. Of course, if this demand breaks, then more likely we'll be able to target, as I said, here's clear refinement. I will use this as a refinement because the huge inefficiency has started from this candle. So if price breaks below this demand zone, this second demand zone, then we are being able to target this third demand zone down here. And yeah, same scenarios, exact same scenarios. Let me just line these demands up because my LCD is screaming. Switching down to the 1-minute time frame, what can we see on the 1-minute time frame? We can see that there was a reactional point, right? I mean, a rejectional point where price just simply rejected on some sort of supply. But let me just check if there was actually no supply tap. Yeah, there was actually no supply tap at any time frame. So price didn't even mitigate the supply at this reversal. Okay, but sorry, let me just go back and continue. So price didn't react on any kind of supply at this rejectional point, but changed character to the downside. What do we know about these character changing movements? I'm just asking you guys, if you can raise your hand, you can answer the question. What do we know about random change of characters in the middle of nowhere? Michael?
They are basically liquidity.
Exactly. Every single character changing movement in the middle of nowhere will be liquidity for us. So here's the upside liquidity. Actually, it's creating upside liquidity, not just simple character changing liquidity. Here's upside liquidity. And the best scenario that could happen to us will be, sorry, let me just remove this. This high point is this is just literally liquidity, this high point. This is liquidity because it created a change of character to the downside in the middle of nowhere. But this supply zone has caused the change of character, right? Or actually, I would rather say that this was the supply. I will use the wick. So this supply has caused the character changing movement to the downside. And there was a liquidity below this supply. First tap, second tap, right? Here's. But this is lunchtime. This is a lunchtime supply zone, so we can't set direct limit order on this supply. But since we can't trade this zone, we can just simply wait for the mitigation on this demand zone down here. And I know that you will ask, no, we can't trade this order flow to the downside. We can't really trade this downside order flow here because price is just coming in the middle of nowhere. Price just reverses in the middle of nowhere. And if the bearish order flow starts, this will be liquidity too. So I would rather not trade liquidity. I will just wait for the less recent demand tap to be tapped. And after this, I will trade. But I won't trade this liquidity building a movement to the downside because this is just a middle of nowhere's reversal. So if it creates a breakout structure here to the downside and creates a new supply zone, it's up to you if you want to trade here. It's up to you if you want to enter in a position here. But more likely, I won't. I will only enter in a position if there's a really fucking high criteria set up for this zone. For example, with liquidity, double-sided liquidity, combination liquidity, blah, 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 blah. I will enter in a trade. But more likely, I won't. And yeah, my major plan is to wait for this demand to be mitigated. And after this demand is being mitigated, we'll see. We'll see what will happen. But of course, there's a chance that price will just simply break above this supply zone and tap this supply. If this supply is getting mitigated, I will send you the markup updates. But you know, or you already know what could happen on this supply, right? We already know the possibilities. We already know what can happen here. We already know what can happen. So yeah, that's all, guys. That's all for this session. I will just type it here. That's it for this webinar. I hope it was helpful for you. So yeah. I'm just stopping the recording.